Hello dear students, welcome to my channel Doctor's Academy for Taxation and Accounting. Through this video, let us discuss the other deductions as per section 36. The following other deductions are also permissible while computing the profits and gains of business or profession. The first one is insurance premium. The amount of any premium paid in respect of insurance against the risk of damage or destruction of stock or stores used for the purposes of business or profession is allowed as deduction. So in this, the first one may be insurance premium for cattle paid by a Federal Milk Cooperative Society. The amount of any premium paid by a Federal Milk Cooperative Society on the life of the cattle owned by a member of a primary milk cooperative society affiliated to the Federal Milk Cooperative Society is allowed as a deduction. Secondly, the insurance premium for the health of the employee. The amount of any premium paid by an employer by any mode of payment other than cash for insurance on the health of his employees in accordance with the scheme framed by A. the General Insurance Corporation of India and approved by the central government. B. Any other insurer and approved by the Insurance Regulatory and Development Authority is allowed as deduction. The next allowable deduction as per section 36 is bonus or commission. Any bonus or commission paid to an employee for service rendered shall be deductible only if such sum could not in any way be paid as profits or dividend. The amount of any interest paid in respect of capital borrowed for the purpose of business or profession is allowed as deduction, but any amount of interest paid in respect of capital borrowed for acquisition of an asset for any period beginning from date on which the capital was borrowed for acquisition of the asset till the date on which such asset was first put to use shall not be allowed as deduction. Lump sum interest paid upfront on debentures in lieu of periodical payments is fully allowable in that year. The next point is discount on a zero coupon bond. Pro rata amount of discount on a zero coupon bond having regard to the period of life of such bond calculated in the prescribed manner shall be permitted as deduction. Here the meaning of zero coupon bond is which is issued by any infrastructure company or infrastructure capital fund or public sector company or scheduled bank on or after 1st June 2005, in respect of which no payment and benefit is received or receivable before maturity or redemption from the issuer, and which the central government may specify in this behalf. And here the meaning of discount is the difference between the amount received or receivable by the issuer issuing the bond and the amount payable by the issuer on maturity or redemption of such bond. The next is contribution to Provident Fund. Any sum paid by the assessee as an employer by way of contribution towards a recognized Provident Fund or an approved superannuation fund to the extent prescribed while recognizing or approving the fund is allowed as a deduction. Then contribution to pension scheme. Any sum paid by the employer by way of contribution towards pension scheme referred in section 80 CCD on account of an employee up to 10% of his salary, including dearness allowances if the terms of appointment so provides, in the year shall be deductible. Similarly, approved gratuity fund, any sum paid by the assessee as an employer by way of contribution towards an approved gratuity fund created by him for the exclusive benefit of his employee under an irrevocable trust is allowed as deduction. Employee's contribution to Provident Fund or Superannuation Fund, sum received by the employer from any of his employee as a contribution to any provident fund or superannuation fund or any fund set up under the Employees State Insurance Act or any other fund for the welfare of such employee is his income under section 224X, but if such amount is credited by the employer to the employee's account in the relevant fund on or before the due date is allowed as deduction. Here the due date means the date by which the employer is required to credit an employee's contribution to the employee's account in the relevant fund under any act or rule or order or notification or contract of service. The next point is laws regarding animals. In respect of animals which have been used for the purpose of business or profession, not as stock in trade, and have died or become permanently useless for such a purpose, amount of loss equal to the difference between the actual cost to the assessee of the animals and the amount, if any, realized in respect of the carcasses of animals will be allowed as deduction. If the sale proceeds are nil, then the entire cost will be allowed as loss. The next point is bad debt. The amount of any debt or its part which is written off as irrecoverable in the account of the assessee for the previous year shall be allowed as deduction subject to the following conditions. If such a debt has been taken into account in computing the income of the assessee of that previous year or an earlier previous year, or represents money lent in ordinary course of business of banking or money lending which is carried on by the assessee, and it has been written off as irrecoverable in the accounts of the assessee for that previous year. Any bad debt or part thereof written off as irrecoverable in the accounts of the assessee shall not be included in any provision for bad and doubtful debt made in the accounts of the assessee. While dealing with the bad debt, the following points are also to be considered. Point 1. If the amount ultimately recovered on any such a debt is less than the difference between the debt and the amount of bad debt allowed, the deficiency shall be deductible in the previous year in which the ultimate recovery is made. Which means if the bad debt is more than the amount which is set aside as per this rule and has incurred a more loss, that more loss can be adjusted in that particular year. Where a deduction has been allowed in respect of bad debt and the amount subsequently recovered on any such a debt is greater than the difference between the debt and the amount so allowed, the excess shall be deemed to be profits and gains of business or profession, and accordingly chargeable to income tax as the income of the previous year in which it is recovered. It is immaterial whether the business or profession in respect of which the deduction has been allowed is in existence in that year or not. So even the business is not there, if such bad debt is recovered, which one already it was written off, then it will be considered as an income during that period. In the case of an assessee to which clause 7A applies, the deduction for bad debt shall be only of the amount in excess of provision for bad and doubtful debts account made under clause 7A. It is essential that the bad debt to the extent of provision for bad and doubtful debts shall be debited to the provision for doubtful debts account in the previous year, where bad debt is taken into account for computing income of the previous year, in which the amount becomes irrecoverable, or any earlier previous year, on the basis of income computation and disclosure standards specified under section 145 subsection 2, without recording the same in the account books, then such amount shall be allowed in the previous year in which it becomes irrecoverable, and it shall be deemed that it has been written off in the books of account. Provision for bad and doubtful debts. The provision regarding deduction for bad and doubtful debts in respect of banks and other financial institutions. In the case of scheduled banks excluding foreign banks, or a non-scheduled bank, or a cooperative bank, other than a primary agricultural credit society or a primary cooperative agricultural and rural development bank, 8.5% with effect from assessment year 2018-19 of total income before making this deduction, and deduction under section 80C to 80U, and 10% of aggregate average advance made by the rural branches of these banks. In the case of foreign banks, 5% of total income before making this deduction, and deduction under section 80C to 80U. Public financial institutions, state financial corporation and state industrial investment corporation also the same, that is 5% of the total income before making this deduction. And for non-banking financial company also the same. Next is special reserve created and maintained by the specified entity, an amount not exceeding 20% of its profits derived from eligible business, or the amount credited to the specified reserve account, whichever is less shall be deductible as per section 36. So here the condition says that no deduction is allowed in this respect as soon as the special reserve becomes equal to twice the paid up share capital and general reserve. Where a deduction has been allowed regarding creation of the above reserve, any amount subsequently withdrawn from such a reserve shall be deemed to be the profit of the business and chargeable to tax as the income of the previous year in which the amount is withdrawn. Here the specified entity and eligible business are a financial corporation specified in section 272 of the Companies Act 2013, or a financial corporation which is a public sector company, or a banking company, or a cooperative bank other than primary agricultural credit society, or a primary cooperative agricultural and rural development bank, which provides a long-term finance for industrial or agricultural development, or development of the infrastructure facility in India, or development of housing in India. Point B says a housing finance company which provides a long-term finance for the construction or purchase of houses in India for residential purpose. And point C says any other financial corporation including a public company providing long-term finance for the development of infrastructure facility in India. Any expenditure bona fide incurred by a company for the purpose of promoting family planning amongst its employees is allowed as a deduction. If such expenditure is of a capital nature, it shall be allowed as a deduction in 5 equal annual installments commencing from the previous year in which the expenditure is incurred. The unabsorbed part of the capital expenditure on family planning is treated in the same manner as unabsorbed depreciation. Then the point 10 and 11 which was removed from this act, and point 12 says any expenditure not being capital expenditure incurred by a corporation or body corporate shall be allowed as deduction if it is constituted or established by a central or state or as per the provincial act. It is notified by the central government and the expenditure is incurred for the objects and purposes authorized by the act under which it was constituted or established. And the 13th point says any amount of banking transaction tax paid during the previous year. Any sum paid by a public financial institution by way of contribution of such a credit guarantee fund trust for small industries as the central government may notify. Similarly, any amount paid in respect of taxable securities transaction if the income from securities transaction has been computed under the head profits and gains of business or profession. The amount paid in respect of taxable commodities transactions if income from commodities transaction has been computed under the head profits and gains of business or profession. And finally, the last 17th point is the amount of expenditure incurred by a cooperative society engaged in the business of manufacture of sugar for purpose of sugarcane at a price which is equal to or less than the price fixed or approved by the government shall also be deducted as per the section 36. These are the various deductions permissible under section 36 of the Income Tax Act 1961 while computing the business or professional income. Hope you understood the basic theory parts of these conditions. If this video is useful, kindly share it with your friends and others in your contact. Thank you very much for watching Doctor's Academy for Taxation and Accounting. If you have not subscribed, kindly subscribe my channel. Thank you very much.